The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Dominic Frisby, keeping you up to date with expert opinion on precious metals and the markets.
Hello and welcome to the Gold Money Foundation podcast, hosted in association with Frisby's Bulls and Bears, with me, Dominic Frisby. So I'm sitting in the garden of a well-known restaurant in West London called the Troubadour, and sitting opposite me is my good friend, the trader Michael Hampton, also known as Dr. Bub. Mike is based in Hong Kong, but he's over in London just visiting. And may I say firstly, Mike, what a pleasure it is to have you back on the show. How are you doing?
I'm very well. It's good to be back and enjoying the last gasp of, well, I was going to say summer, but let's say a nice, pleasant fall season.
It is. It's a kind of, there's an autumnal chill in the air, but it's still very pleasant. Mike, what have you made of London since you've come back? What have been your impressions? Is it more busy than Hong Kong? Is it less busy than Hong Kong? What do you make of the economy?
It's more similar to Hong Kong than I remember it being. I mean, both London and Hong Kong are enjoying some pretty terrific property booms at the moment, driven probably mainly by low interest rates. But I was really surprised by how gentrified London's been in various areas. And I did visit a lot of different parts of London on this trip, but places like Ealing and Camden and the Docklands area that I hadn't seen for years, I managed to visit this time, and they all look like they gentrified quite a bit. So despite all the talk of austerity and recession and so forth, London looks to be doing pretty well right now.
Are you surprised by that?
Well, I'm not if I look at property prices, but I've also been reading stories of economic doom and gloom in Europe, and some of that carries over to the UK, so I really haven't seen much sign of that at all.
Very good. Okay, now I suppose I want to ask you really about what your take on the markets are at the moment. We're talking, it's mid-October. If you look at this year, gold's pretty much played out according to the seasonal patterns. Stocks have to a lesser extent. Why don't we start with gold itself? And what do you make of gold at the moment? Is this just a kind of normal October correction before we head off higher?
Well, we're less than a month away from the U.S. elections, and I think that's going to have a big impact on both gold and the stock market. And I'd like to bring the four-year election cycle into the thinking, as well as the seasonal cycle. If we start with the seasonal cycle, then this is normally the time, October, when we're seeing a correction in the gold market. It often peaks the first week in October, right around my birthday, which is the 7th of October every year. And we've seen that play out almost, not every year, sorry. My birthday comes every year, but not the seasonal peak in gold. But, and this, I've been skipping the last few birthdays anyway, but never mind. Yeah, so we saw more or less that. We saw a peak in gold around the first week of October. We're seeing a correction now. It's been pretty small dip, a very shallow dip so far. My view is that dip will last as little as 3 weeks or so, which would bring us probably a low this week if we have that, and maybe as long as 3 months. So ideally it would be somewhere in the middle of that, around Christmas time maybe, in the average year. This year it might come a bit earlier because I think gold's actually behaving so well, pretty well. So right now I'm watching to see how much volume gold has on the downside. And I'm watching even more closely gold stocks, GDX.
Yeah.
And I'm looking for a possible low this week in GDX around 50. And if we break through that, then maybe 48. And if we break the 48, then I don't really have a clear target, but it could be another few dollars below that. So I think maybe GDX will give us a clue as to when we're going to see the bottom on gold. But ideally, for the bulls, it would come this week.
Okay, and just kind of reading some of the stuff that you've posted on your website over the last couple of months, would I be right in saying you think we're in a pretty big move for gold? You think gold made a pretty big low? I can't remember when it was. I think it was in June, and we're at the start of a kind of one of gold's kind of multi-month moves up.
Yeah.
I mean, if we were talking about it in Elliott wave terms, we've had the wave one and the wave one correction, and now
the next move up. Starting whenever it's going to start, and maybe we'll see a little rally now and then another drop into December, to a higher or lower level than we see in October. But after that low is out of the way, we might see a pretty big gain. And I'd like to now talk about the 4-year cycle. But in terms of Elliott waves, we've seen the one wave one up. We're now seeing maybe wave 2 down, and that often comes ABC. So we've probably seen the A of that. Maybe we're about to see the bottom of the A. Then we could see a rally, a B rally, and then another C down, and then we see a big rally up.
Okay.
Or that sometimes that second wave is very very small, very shallow. So that would be the most bullish case, that the dip is finished this next week, and then we get the beginnings of a good rally. That next rally could be a pretty good one. I think we saw about 15 points up in the GDX.
Yeah.
So another 15 points up from 50 would take it to 65. That would be a minimum expectation if this is a good wave 3 ahead of us as part of a good Elliott wave up. Another way to look at it, and I'd like to come into the 4-year cycle.
Okay, it's good to hear you bullish about gold, by the way. It's you've been cynical in the past when others have been bullish, and it's good to hear you bullish.
Well, no, I think I've usually called gold pretty well. I tend to be a pretty good buyer. I'd sell a little bit too soon, but I want to be long gold. I'm quite long gold at the moment, and call options and so forth at the moment. I have hedged them a little bit, and I'm now deciding what to do with my hedges over this next few weeks, or few weeks. But anyway, the next move up, big move up on gold, if it's a longer lasting one, on the 4-year cycle, could be very exciting indeed. I was mentioning to you earlier, there's a guy called Rod McEwen, who I was lucky enough to meet a few months ago, and he looks at the 4-year cycle on gold, and he says the average 4-year cycle in the year after the election, let's say from election time this year, from around about now, November, over the next 12 months, is a double. So if we make a low in GDX at, say, 50, then we could see GDX over the next year hitting 100.
Well, that would be all-time highs, wouldn't it?
I don't remember the all-time high, but it might be. I'd have to look at those charts. But, I think it would probably bring it up to a new...
Do you know what the Hui is now? Where the Hui is?
Well, I have to look at those charts.
Yeah, okay.
I think when we do this, when we we'll put a chart up as well so people can look at that. But it would be a pretty powerful rally from what we've seen. And I want to be long some gold shares, especially producing gold shares.
So let's have a think. I'm just going back. I mean, 2008 was the last general election. Gold put in a very clear low in late 2008 and had a brilliant end of 2008, and then I think by the end of 2009 it had certainly more than doubled. 2005 2005 is a pretty good year for gold, I think. I can't remember. And 2001 was definitely a good year for gold. So, I mean, there would seem to be some validity in that. I haven't back-tested that theory, but the year after an election, I'm pretty positive.
Yes, Rob McEwen's figures go back quite a few years. I think he was probably looking at from memory at the XAU.
Yeah.
And that database goes back a long, long way. I think it goes back to the 1970s. So his 4-year cycle would have been based on all that data.
Dimitri Speck, if you're listening, let's see a seasonal chart for gold shares in post-election years. Let's have one of those on your site.
But of course, anything can happen, and although my view is bullish on gold, it's less bullish on stocks, and being pulled in two different directions here. Yeah, because I still think that that there's potential for a lower stock market. We're in QE3 now, or QE whatever number we're in. We're in the QE period. And that's obviously helped the market. But it seems like every time we see a new QE, it's less powerful than the one before. And this one at the moment seems to be fading. Yeah. So, I mean, I am a bit worried about stocks. I mean, the sort of trade I like at the moment, because option prices are pretty cheap. From the time of the gold stock low, which could be next week or a bit later, is to be long call options on gold stocks or call options on gold, and to also own some puts on the S&P 500 or other stock indices. Yeah. I think buying it with these volatilities that we're seeing now, that would be a pretty good trade.
Maybe, just maybe, we might finally get the time, the long vaunted time when gold and gold stocks finally decouple from all other assets, and they rise when everything else trades sideways or falls.
Yeah, I think that would fit my view very well right now.
But we've been waiting a long time for that.
We have seen it. We saw it in 2000, last year, was it, for a couple of months?
Yeah.
We saw a big move up in gold. Basically, money was shifting out of the stock market into the gold market for a couple of months last year. So
sure, I thought last year was pretty rotten all round for gold. Maybe, was it late 2010, are you thinking?
Well, I'm thinking of the time when gold, basically when gold shot up. Was it 2010? We saw a high in gold last August, right?
Yeah.
And that was a pretty powerful move up.
But the gold stocks never really confirmed that.
And the gold stocks never confirmed that. But so gold was moving up at the time the S&P was moving down.
Okay, fine, yeah.
That's really what I'm talking about.
Okay, fine. That was a kind of post. That was when one of many, but one of the first Greek panics set in.
One of my favorite charts, which I'll put up a link to this podcast, is what I call Bernanke's racetrack.
Yeah.
Because Bernanke's been pushing money into the system, and of course he wants maybe stocks to go up, and they do go up, but gold tends to go up more. So the racetrack is the idea of we start at the same price, GLD versus SPY in this chart. They start at the same price, and then you can see what's moved up faster. And what's happened is GLD has moved up faster, and when it dips and comes close to the GLD price, it's usually a pretty good time to buy gold and
I see.
and get it. And so that to me looks like we're now into another period where GLD is moving up faster than stocks.
All right, Mike. Well, it's been great talking to you, and we're going to record another podcast talking about less a trading viewpoint and more a philosophical viewpoint. But as we close this one, why don't you give out your website and let people know if they want to find out more about your work?
Sure. They can come and see the website and also see the charts. I've mentioned the two charts. GlobalEdgeInvestors.com.
GlobalEdgeInvestors.com. It's a chat board, and it's a great chat board, and there's all sorts of interesting things going on there, so take a look. In the meantime, Michael Hampton, thank you very much.
Thanks, Tom.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our gold research section.
Hello and welcome to the Gold Money Foundation podcast, hosted in association with Frisbee's Bulls and Bears, with me, Dominic Frisbee. So I'm sitting in the garden of a well-known restaurant in West London called the Troubadour, and sitting opposite me is my good friend, the trader Michael Hampton.
The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Dominic Frisbee, keeping you up to date with expert opinion on precious metals and the markets.
Mike, what have you made of London since you've come back? What have been your impressions? Is it more busy than Hong Kong? Is it less busy than Hong Kong? What do you make of the economy?
It's more similar to Hong Kong than I remember it being. I mean, both London and Hong Kong are enjoying some pretty terrific property booms at the moment, driven probably mainly by low interest.
Also known as Dr. Bub. Mike is based in Hong Kong, but he's over in London just visiting. And may I say firstly, Mike, what a pleasure it is to have you back on the show. How are you doing?
I'm very well. It's good to be back and enjoying the last gasp of, I was going to say summer, but let's say a nice, pleasant fall.
It is. There's an autumnal chill in the air, but it's still very pleasant.
Interest rates, but I was really surprised by how gentrified London's been in various areas, and I did visit a lot of different parts of London on this trip, but places like Ealing and Camden and the Docklands area that I hadn't seen for years, I managed to visit this time, and they all look like they gentrified quite